Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 3:30 in New York. It is the 31st of December, last day of the year 2012, last report of the year in 2012. This is the daily report. Most importantly, I wish all of my subscribers an incredibly Merry New Year, a Happy New Year, and a blessed 2013 filled with great trades, health, happiness, and family. Traders, there's no doubt we couldn't ask for a more superlative finish to the end of the year. Of course, we are in long positions in gold, roughly at 1658. Market today up currently about $17, as you can see, 1674. It's had a high of 1681.50 with a low of 1655.90. We're looking at a 2-hour Henkin chart. And of course, you can see a couple of areas that we have really pointed out based upon a fib retracement. The retracement, of course, is from approximately the 1760 area down to about the 1636, covering this last drop in the metals markets. And when we talk about the time parameter involved, this started almost near the end of November and carried us out really to 3/4 of the way through December. You can see it found its bottom. My belief is that what we're witnessing now is the beginning of our impulse wave 3. You can see, first of all, 1664. That is our real breakout area. When we look at the market through this, you can see on a technical basis, you've got, on a short-term basis also, you've got this triple top in the market, 3 small tops where you've had resistance in this particular area. And as you can see, without a question or a shadow of a doubt, that when this market broke, it broke fairly hard and sizable. Look at the size of the Henkin candles, absence of lower wicks. And the other thing that we are noticing is our first real level of resistance now. And I'll call this our first level of resistance in 2013, because as this market closes, I expect it to close in this area itself. You can see that we have had highs near this area, but it could not take it out. In terms of looking back in time, nothing really right in here, because as the market fell, the real power came as it fell below this 50%, which is just below 1700, 1696, right in here. And when we look at it, you can find one thing, and that is you have a series of lows down here, which shows that it was very supportive as the market really sold off. But other than that, this to me is a very, very interim point in terms of resistance, right in this area here. This should be fairly strong right in here, but I don't see it as being too much trouble in taking it out. As I said, in the big picture, it's definitely a middle ground level of resistance. Now, when we go ahead and convert this 2-hour chart into a straight candlestick chart, you can really see, let's go ahead and kind of blow this up and also thin out the candles here. So what you can see is, as this marketplace moves up, it attempts to make a high and take out this one particular area, 82. It cannot. As I said, the high is right around 80. After that, for the last 2 hours, it has just kind of consolidated. It's still trading up very much near the highs. I don't pay too much attention to the fact that this is a red candle. After this kind of a move to the upside, and this is that major move, you can see it all took place really within a 2-hour period of time. You can see that after that, it's given some of that back. And in terms of how much it's given back, not really that much at all, because now, not that we would do a fib retracement here, but just to get an idea, and all I'm doing is going from the low to the high, and let's go ahead and blow that up a little bit. And as I said, I'm just putting in this fib retracement really just so that we can see how much it is retraced from the high. Now, if we look at this high here, and as I said, 1680 on this high, and then we look at the low that we got right here, The low is just above a 50% from the absolute low right in here to the absolute high. Now it's going to look a little bit different when we convert this to a daily chart. Now this is a daily chart, straight candlestick format, and when we look at the entire range itself, 1681 on the high, 1656 on the low, and you can see that our current, which is going to be very much our close today, comes in right here, and so it's really given up just a little bit over 23% and not quite 38% on the day in terms of giving back the gains of the day. Again, a spectacular showing for the first part, or the last part, I should say, of 2012. To say that 2012 was kind of a tricky year in terms of trading would absolutely be an understatement. Now, we did very well. We were able to trade profitably. I believe when everything's tabulated, including marking it to market today, we're going to be at around 260% profit or return. Extremely good year when we absolutely consider the following, and that is that when we look at the beginning of 2012, I'm just going to put my pointer to this low here, which is roughly at, say, 1504. So we had 1504 to a high of 1800. We had a series of two tops, a continuation of this triple top that came at the end of course, 2011. And the market is going to close really for the year, call it 1677. So when we look at the actual move, we have seen a move roughly of, call it 1500, so about $175 move from this low to our current fixed price today. So we've gotten about $175 where we were able to trade it to about $255. So we were able to outperform the market. That being said, this year is over. Great year. Let's put it into the notebook, so to speak, and let's focus on next year, because this year is, in essence, over. And this being the last report of the year, we want to look at what we're thinking about next year. And really, what I think that we're going to see, of course, is an exciting move. And what move am I talking about? We've talked about it before. When we take a look at this, our major third, our major fourth, and we're now in our major fifth. Within our major fifth, this is our intermediate one, intermediate two. My belief is that we are currently in our intermediate three. I believe that our intermediate three will definitely take us above 1800. At some point, we'll get an intermediate four, a corrective wave, and our final thrust, our intermediate fifth, completing our major fifth, I absolutely believe will take out the record top of 1920. It almost has to, because unless it's a truncated major fifth, it's got to go above this major third here. And so I believe that we're going to have some good trades really available to us, some great opportunities. And most importantly, I think that one of those opportunities we're currently in, which is positioning ourselves right before this major move. Of course, it was a difficult move to put on. And when I say difficult, I mean under the belief that we've got some real large hedge funds and institutional traders kind of squaring their books. I certainly didn't want to be caught before those books were squared, and that's why we held off for a while. We did get into the market, and of course right now the news is that there is no resolution in the fiscal cliff, and we'll have to see how that carries out through the day. By the time this recording comes out, that might not be a fact anymore. But what's critical right now is that on a technical basis, as I said, we found real good support in the areas that we've looked at. I talked about where that resistance is, but overall, the big picture is I believe that we've probably started in intermediate three, and that intermediate three should take us, at least from here, another $125 to test the triple top at 1800. Traders, we're looking at a two-day chart. And of course, this chart is really illustrating on this two-day chart the major fifth that we're currently in. That's my assumption. What we can see is when we take a look at it, we certainly have our first wave, intermediate 1, intermediate 2, and as I said, we've got very, very good fib numbers that are giving us a very logical place to look for the onset or beginning of our impulse 3. I believe that's had that take place or transpire, and I believe that we are going to go into 2013 with our impulse wave number 3. That is an intermediate, all part of our major fifth. You know, traders, throughout the year, what we have seen is on really nice surges up the silver market in terms of percentage gains, outperforming gold to the upside, and on percentage losses on down days, outperforming the losses. Now, in today, it's a little bit different. Gold is absolutely shining as a safe haven. It's up about 1.06%. Silver is up more than that. Percentage gain up currently 35 cents. And as you can see, our current print on the board is about 35 in that area. As I say, puts it up between 33, 35 cents on the day with a low of 29.80 and a high of 30.55. We are looking at a weekly chart. And of course, what I really want to see in terms of a longer term move in the market, I've got a short term exponential moving average on a weekly. It's a 14-week chart. 31.85, that's the number. We've got to see it take out to break above this particular line. But here's what we do have, traders. What we do have in this market, and if I blow this up, of course, it's not a pure three-river morning star, but it's what I call the three-river morning star variation. That's right here. These last 3 weeks can really be characterized as a drastic down market. 29.45, 38% retracement finds good support in this area. You get your doji-like or star-like candle right here. That's followed by the market finding a base and then trading up off that. Now, typically on a three-river morning, even a variation, what you want to see is this green candle be a little bit higher, and even on a weekly, this caps the week off, but we're not going to see that. I will tell you this, I am quite comfortable with what we see right now, and most importantly, I'm quite pleased. We've been sitting, of course, long in silver, and I believe we were long in silver at, I think, 30.13, somewhere right in that area. And right now, we finally are seeing it move into a nice positive territory for us. And traders, for the last chart of 2012, God, that sounds funny. We're going to look at a daily chart in silver. What we can, standard candlestick format, what we can really see here is the way that silver formed a base in this area. This is that 29.74 point, that 61% retracement. It is a retracement from this major rise up, and then we get a 61% retracement. So when we look at a count, this would be in our intermediate count. This would be our wave 1 here. This would be our wave 2 here. And then if the market does carry up like I believe that it should and finds a base or a support area here, what we're looking at is the beginning of our intermediate wave 3. Traders, it has been an honor and a privilege to be a part of your team as you worked with the precious metals markets in 2012. I thank you so much for your support, and I look forward to a blessed 2013. I will always work my heart out to give you the best information and quality technical analysis, and it is my hope and my dreams that that effort allows you to go where you want to go in terms of your financial journey. This is Gary Wagner wishing you a great and blessed 2013. Yes, and we will talk to you next year. Bye-bye.